So let's talk about the stochastics. The stocks have been around for many years now, and many traders all around the world use them. Some love them, some hate them. Some think oscillators don't have any value because they don't know how to read them. I even know some people that only use oscillators to get into a trade, and they use price action to get out. We use the stocks to get in and out of trades during a trend. We don't really want to use them to trade ranges, but they are very applicable to ranges, and I want to show you this right now. So this, for example, is a obvious range. If we take a look at the previous session, we made these double bottoms here, then these double tops, broke above, double tops, broke above, retested. Then we made another double top here, which, by the way, we then retested around here. And then before that we made a double top here with a strong departure, so there's definitely still some orders sitting here. When we came back to this area, we broke down again. So this is very obviously a rangy market, and I see exactly one entry here for us, actually two entries. That would be this one here, because we broke above these double tops, we retested them one time, and then we slowly drifted into them, and then we started to make a divergence on the stocks, as you can see right here, and then we had a close of the RSI above the 55 level, double bottom, so we can definitely trade this back up here, then go to break even and see what happens, or lock in a profit around here, the middle of the move. By the way, this was also a 50 round number, yeah, 132.50. There's a lot going on in this chart, and actually after we broke above this double top and retested it, this would have been another entry right here, but we very quickly came into this strong double top up here and broke down. So as you can see, it's very important to mark up your charts on the higher time frames in order to not get caught up in one of these moves. But anyway, this is not a perfect market. This is not what I would like to want to trade. But if we look at the stocks, they can be a great helper for us in identifying market turning points. For example, here after the divergence played out, and then finally the Heiken Ashi candles gave us an entry signal as well as the RSI. We could got in here. Then here the stocks turned around this point. RSI closed above 55 here. So we could get in here and go to break even once we reach this zone, or we simply get out of the trade with a small loss once we see the strong rejection from here. Get out here because the stocks already turned as well, and the RSI closed below 45 in this bar. If we don't find a trending market, the easiest way to trade it is to stay out. I have a lot of experience with this. I know how to trade constellations like this one. This is actually a price magnet. Very often it will reach this point. So if I went long here, I would have my take profit up here, for example. There is no pivot point in our way up here. The next pivot point is up here. So we can get a small stop, 10 for 30. This is a nice risk-reward ratio trade. Yeah, but the easiest way is to simply stay with trending markets. So okay, this is obviously a very trendy market. 12th of January, go to the M15. We broke below this low here. Actually a triple bottom, so I always mark up my charts, as you can see. We broke below, we retested it here, and then we went into this downtrend frenzy. Suppose we come into the market around this time or around this time. Here, very easy entry with the stocks, overbought, retest. This level roughly, we made a small consolidation here, then another pullback, retest of this one, and again when the stock turns and the RSI closes below 45 and we get a candle opening clearly off the moving average, it's time to get in. And we always want to go with the macro trend, so we use the M15 stocks as well. Let's take a look at our entry here. And then we go to the M15, and as you can see, the M15 stocks is below the 20 level. And that is the important thing, because the stock, when it goes into overbought or oversold, doesn't automatically mean that price is going to turn. This can also mean strength for the move. So a stock that stays below 20 or above 80 for an extended period of time, that simply signifies strength during a trend. There are even strategies that, for example, advocate going long as soon as stocks reaches overbought. So as soon as you can see a stock going into overbought mode here and also break out of this range, then this is where price really took off. So how we do this is we want to be on the right side of the cycle, of course, especially on the M5. So on the M5 we don't want the stocks to be overbought or oversold when we get into a trade, but on the M15 this can be a huge bonus. So as you can see on this trade, we made a small cross up and then we crossed down again below the 20 level. Stock never even made it above the 20 level. This signifies a really strong move in the market, and as soon as we get a minor pullback on the M5, this is where we want to get in, because this has just been the opening drive and there's a tiny consolidation. We want to get in on this move as fast as possible, and this is what we do with the stocks. And another thing I look for on stocks is, of course, divergence. Especially on the M5, I really like to see divergence over 1, 2, 3s. So now you might ask, what the hell is a 1, 2, 3 on a stock? So let me quickly look for a example. Yeah, for example down here, not perfect, but still. So we are coming out of the oversold, make a pullback, and then we break above this level on the stock right here. And this signifies, together with the rejections in this area, you can see the long wicks, and then we get this 1, 2, 3 here. We break above 1, 2, 3. We break above 0.2 in this candle. This is almost good enough for me already to get in on this move. This happens more often actually than you might think. Here, for example, 1, 2, 3. Once we broke below 0.2, which is in one of these candles, then here we get an entry signal down. But as I said, try to stay with the trend. That's 90% of my trades come with the trend. For example, this one here. We never reach the overbought mode, but again, we broke below this, we retested this, and once we broke below this and the pivot point and stocks pointing down, and if we go to the M15 once more, again, same story. We are below the 20 and barely crossed down, yes, but we did. And you can see the RSI is way into oversold mode, so there is real strength in this move. And then here we have another beautiful entry. Let's take a look at what the M15 stock was doing here. This would have been our entry point. And yeah, it made it above the 20 level, but still at the entry point it crossed down again. So this is still signifying strength. However, to note is the divergence in this one. I would be cautious with this entry. Nevertheless, this down move has been so strong. There must be some kind of fundamental backdrop, so every chance I get to get in on this trade, on this trend, I will take. Okay, so to recap, a move into oversold or overbought does not necessarily mean that price will turn. A move into oversold or overbought can mean strength, and a pullback on the M5 into overbought while the M15 stays in oversold. This is one of our most perfect trades. So how the M5 stocks and the M15 stocks play together is very important in this strategy. This is our multi-time frame analysis, and without multi-time frame analysis our probabilities for making winning trades go down way too much.